So the reason why I will go for the Euro USD is because if you watch carefully on the Euro USD, we had price coming to the fair value gap that is formed right inside of the October 2023 midnight open price. But for GBP USD, price has not yet used the same price of the talks, the October 23 midnight opening price. So in GBP USD it has not yet used it, but on Euro USD price has now used it. So price has now used it right here on Euro USD. So that is why I'm selling Euro USD and I'm not selling GBP USD. So let's see how it pans out. If you watch carefully on the H1 time frame, on the H1 time frame, I've already broken Asian range low. And on GBP USD, we have not quite done that yet. Then on the 30 minutes time frame on Euro USD, we are seeing a fair value gap formed right here. We're seeing that fair value gap formed inside. Then if we are able to grade this fair value gap on the 30 minutes time frame, let's grade that on the 30 minutes time frame. Grade that and go to 30 minutes time frame. This is what is going to happen. So that is what we have right here. Like the 5 minutes time frame more. So broke down by using that fair value gap, this initial fair value gap that was formed here during the London session. We're using that fair value gap as our inversion fair value gap. So let's see what happens. Yeah, alright, so that is what we have seen. So what are we seeing right now? We're seeing price respecting it. Remember that ICT said that all the the New York session bread and butter setup is going to form basically in one of the prices, either the midnight opening price, the 414 or the 9:30 opening bell. And what do we see on Thursday? On Thursday, October 23. What do we see? We see price respecting that fair value gap formed inside of the midnight opening price. So this setup is an A plus setup, and that's how we see price moving to the downside. So following other flow from the daily, the H1, 30 minutes, 5 minutes, 1 minute, and watch what we're seeing right now. Should be seeing profits. So we'll just screenshot it and send to the community. We're in profit already. In profit. Let's hold. So let's continuously watch and see how price pans out. So price is moving mightily in our favor. So let's see. Alright, we're getting a big push to the upside. Let's see if that fair value gap still holds. If it does not hold, we just have to cut it. Alright, because it has done this, I'll quickly flip my bias. What has happened? Now, if you watch carefully, what we did here was we went higher, we came back, then we had a shift in market structure here. So now this was what they did yesterday, and I don't want to take chances today anymore. I want to quickly follow the new information on the market. Remember, I said all this. That is the reason that it doesn't have so many things on its chart. So I want to follow the new information the market is giving me right now, using the shifting market structure the market has given to us, and using that original idea of this fair value gap right here, which will be um which will, which will be this fair value gap right here. So I'm going to use that since the market has given us a shift. The market now it has retraced down. So let's see what will actually happen here if it will actually hold. So in the 15 minutes, look at what happened on the 15 minutes. We is it 15 minutes? On the 30 minutes, what happened was that we tapped into this other block right here. In the 15 minutes, we tapped into the other block right there. So we're seeing that retracement. Let's see if it actually pan out on the 5 minutes. Seeing that we saw it as this, I'm going to add one more to it. I'm going to buy one more. I'm going to buy one more there, because we want to follow what the market is doing in the new information that the market is presenting us with. So let's see what we have. So because on the 30 minutes we fully closed that fair value gap, and we had a shift in market structure on the 5 minutes. So we want to flip our bias now. We are not sentimental when we see shifting market structure, when we see price changing its narrative. We don't hold on to the trade. As well, we don't use everything in one trade, because the market can quickly change. So the first time you might enter might be the tuition fee to pay for getting the free information. So that is what we want to wait and see now. If you can see now, price is gaining momentum here. It's gaining momentum here. So let's see what the price gives to us. So we see that the price has now retraced deeper, and this is why in trading, reduce your risk, because a lot of things can happen in trading. A lot of this kind of scenario can happen in trading. So let's see what happens more. GU is tanking to the downside aggressively. EU is following suit. So a lot of manipulation here in the marketplace. A whole lot of manipulation here. But let's see. Now if you watch what price did on GU, price tapped into a 15 minutes fair value gap that was formed inside of the consequent encroachments of a weekly week, and price traded into it. See what price is doing right now. Now if you watch on the GU, on the EU, because price already traded into the 15 minutes other block and gave us a shift in market structure, I didn't want to trust the short anymore. So what I want to see is if price can have a willingness to trade above this area one more time. Once it trades above this high, here, then I'm going to add more and anticipate that it's going to come to our London high there. So let's anticipate if it's going to come to this high, but after it has broken this one. So let's see. So now on the 30 minutes, what happened is that we quite close above the consequent encroachment of the 30 minutes fair value gap. So this alone has given me, okay, there's a temporary short-term shift. Not that we have totally discarded the bearish trend on the daily time frame, But on this 30 minutes time frame, we can definitely see that there is a short turn in the marketplace. So what I want to do now is to focus on buys. So if you're focusing on buys, now you can see it's already doing it already, closing above the consequential encroachment of the 30 minutes fair value gap. So 1.5 minutes, and see if we can get the London high. So you see that it's not just sticking to one idea, say this and only this, because the market is constantly feeding information. So that is why you have to constantly use the ICT, um, high frequency trade, constantly circling around the time frames to see narratives from the daily, the H1, the 30 minutes, the 5 minutes, the 3 minutes, the 1 minute, the 50 minutes, constantly circling around them, and also using intermarket relationship, GU, GJ, to constantly feed yourself on what. So what I've actually learned here, the lesson I've learned here is not just to stick to one idea. You have to constantly circle around the time frames to see new informations that the market might be giving. So you can see now that we have constantly now moved to the highs, to the upside, seeing first of all the shift in market structure, and seeing how on the 30 minutes time frame we closed above the consequential encroachment of this fair value gap, giving us a short after we hit the other block, giving us a short term shift. So you can see that the market is, so the most important thing you need to get from this lesson is FA. You don't just stick to one idea. If there is a turn in the marketplace, don't marry the idea that it's going to continuously go down. If it has already shifted, you have to follow what the market is doing, close the market in a small loss. You can re-enter again if you still have capital. So this was what he did yesterday that made us lose a whole lot of money, because we are marrying the idea that it has to continuously go to the downside, not when it has already shown us and tipped the sense to us. So this is one of the most powerful lessons I've learned today, not to stick to one idea and marry it when the market is trying to tip its hand. That's how I want to go up, I want to go down. So this is very valuable, and I'm happy that I learned this with time. And this is what we have right now. So let's see how it pans out. So just watch what price is doing now. So every time I've learned what I said, always try and see what information the market is trying to give to you. Always try and see what's information, new information. Don't just stick and marry the idea. And understanding naked chart also really helped me. Really helped me. So I had to go to a naked chart and see what the market was doing. What the market was doing on the 30 minutes. I had to scroll back and see the ratio of liquidity here, and look at that fair value gap formed. Market came back, shifted market structure here. Then if we take the swing of this from here to here, there's deep discounts. Then seeing these deep discounts, okay, price is gonna sweep this liquidity, sweep this liquidity, and sweep this one also. So understanding what the market is doing is very key and very vital. Very key and very vital. So now I've also learned something using the naked charts to also facilitate the one that I'm drawing all my annotations in. Okay, it's really amazing. So let's go back to our original chart and see 5 minutes Beautiful delivery here, beautiful delivery here. Amazing. So watch how the market is now using. First of all, that shift the market structure we got, and so this is really amazing anyway. Really amazing. Wonderful. So you can see that flipping up and constantly knowing what the market take one out and allow the other one to run. Reduce my risks and allow the other one to run. So that is how we trade. That is how we trade. Alright. So don't marry the idea. Once it has turned. No sentiments. Close the trade even if it's the loss. Enter again with less of that one you entered with. So that is how you stay profitable in the marketplace. Because the market is constantly feeding new informations. So doing the daily. So this is the repertoire, the rules, the logic, the sequence daily, the H1, the M30, the M5, M3, M1, constantly circling and seeing what the market is doing. So this is what we get. This is what we get. This is what we get. So watch, see how the market is moving. Amazing. Amazing, amazing. All right. Thank you.